Okie dokie, Heidi ho everyone, and welcome to today's Learn to Trade live and free with me and Ash. Morning, Ash. You got a trade?
Yes. Good morning, mate. Yes, I have a trade that we can set now. It is. Oh, I can't find where the live show is here. Let me just
What
see
you
if I've
mean?
got. I've got the. I have got. I am on the. I'm on our channel, but I can't find where the live version is. So I can't speak to everybody. Can't see who's in. That doesn't matter. Okay.
Alan's saying hello.
Hello, good morning, good morning. Okay, well, I'll tell you what. Sometimes it comes up and sometimes it doesn't. I'll tell you what. Let's not worry about that for now. I'll just show you my screen and show you the entry levels and everything else. It is for a long in the FTSE. Now, I am fundamentally short in the FTSE, so it's I'm going to grade this trade around about a 4 for a probability of a winner, if you like. But I'm taking it anyway. And these are the levels: 59.30 for your entry, 5,900 for a stop loss, and then we'll have a look up at this area here, which is around about 59.75 ish. So there's around about a 45 pip run. So it's a 1.5 to 1. No kind of take profit area. Maybe you could take profit there, but we'll see what happens. What I'm going to do is just see how the price reacts at that particular level, and then I might just close all out because I am fundamentally bearish, but I wonder whether we might get one more run up, just because we have got Jerome Powell out tomorrow, and with Jerome Powell out tomorrow, um, um, there might well be just some, I don't know, maybe people are just not very keen on trend, trading this to the downside just yet. Now you will get pipped in a moment, so you want to get your entry in if you're going for it. 59.30. It's a low grade trade. Doesn't not got a massive probability of winning, but I'm just going on my gut feeling that this market might not be ready to come down yet. Now we have had some very bearish sentiment coming out of Asia, and we have had the Chinese government also banning imports. In fact, we'll come back to this in a minute, mate, because I know you've got something to do. So there's
Yep.
your levels. I'm going to pass to you, and you go, and then we'll come back to this and later on, and we'll explain it a bit more.
Righto, mate. It's to do with the pound US dollar trade that we placed yesterday. I think it was in the show. I'm pretty sure it was. Screen. Come to me, baby. And what I'm going to do is I'm going to move my stops to entry, which is 1.2345. Wasn't on that account, was on that account. There we go. So 1.2345. Moving my stops to entry. I'll tell you why when we get a chance. There you go. So there's every chance we'll be taken out of this, and that's perfectly fine by me. I haven't got a problem with it. What I do have a problem with was my analysis from yesterday, and that's why I'm cancelling the trade. Well, I'm not cancelling it. I'm moving my stops to entry, which probably will be one and the same thing. If you want to stay in, by all means, stay in. But I'm cancelling it. I'm not cancelling it. I'm doing this action because I think my analysis was just a little bit off yesterday. And I'll explain that to you in a little bit. But that's the only thing I want to say at the moment, mate. We will, if we've got a chance, we might as well set up the hourly trade while we're here, eh? You've got your numbers in?
Yeah. Go for that, mate. Go for that.
Yep, righto. So the range today is the last three bars, as always, of the hourly chart. 1, 2, 3. So here's the low, here's the high. And we will place our order long. Hang on, I'll just get rid of these in case. Oh, no, I'll place the order first. Okay, first order we're going to place is the buy order, and it will be a buy stop. As always, at 15 pips above this bar, yes, that's the top of the range. 1.23423 becomes 1.2343, plus 15 becomes 1.2358. So 1.2358 is our entry level. Stop loss will be 10 pips below the low of that 3-bar range, which is at 1.23085, which becomes 1.2298. 1.2298 is our stop loss. So I'll put that. Maybe I can I? No, once I'm open, I'm open. Or can I? Maybe I can. Yes, it will let me. How amazing. All right, so we've got 1.2358 as our stop loss. And we've got 1.2298 as our entry on the sell. Rightio. That's up unchanged. Now this one, which will be exactly the opposite. So the buy order will be at 1.2358 and stop loss on that will be at 1.2298. So there's our order for the day. Sorry about the little fellas here. They look a little bit out of place, but no, I'll change it. I hate sloppiness. Not as much as my wife. Stop loss.
I almost sounded like you were saying, I don't hate sloppiness as much as I hate my wife.
Certainly not what I meant. That's what it sounded like.
Yeah.
Oh, I'll get this right. SLI. That's got to be something, isn't it? SLI. Something to do with the car. That looks right. Happy days. Okie doke, guys. There is the... Oh, didn't even place the trade. Okay. So that was the buy, the sell. Come on. Is a sell stop. Entry level, 1.2298. Stop loss, 1.2358. There we go. That's today's OCO, and we are in the market. Forget all these stop losses and things that you see here. That is the this trade here, which, as I repeat, if you're just joining us, I've moved my stops to entry and potentially expect to get taken out of that very, very soon for no win, no loss. And again, I'll go through that a little bit. Good on you, PL. A little bit later when we've got time to give you a reason as to why I don't necessarily want to, certainly don't want to be in this trade if we get above these levels, that's for sure. Righto, Ash, back to you, mate.
Okay, mate. Well, we have been triggered into the FTSE. So let's bring this. So if you could stop sharing for me a second.
I can.
Right, we've been triggered into the FTSE, and I'll talk just a little bit more about the reasons behind this trade. So our entry, well, you can see here, 59.30. It's currently at 59.37. So we're about 7 pips to the good. We're aiming for around about 47. So I want to see this this daily pivot and the trend line up here just tested. I want to see what happens if the market can get up. Let me just double check. I got my target's right there. There might not be so much in it actually, but we'll see what happens. But the thinking behind it is really, you know, as the market is certainly bearish. You know, it's had a bit of a bearish outlook today, and the news out of China is that they're banning meat imports from Australia, which is, you know, it's not the best thing. When you see sort of trade breaking down, it's not the best thing. So the sentiment should really be bearish. And the only reason I've taken a trade long is that when you look at this 4-hour chart, then the structure's still in place. And we do have, you know, something of a head and shoulder. I'm just going to bring it onto the futures because It's just a nicer chart to look at, or a better chart to look at, in my opinion. When we have a look at this on the futures, then what we see is a potential a distribution pattern, so that there is a little bit of weakness going on up here, and we do see a trend line up at this area here. And my slight issue really is that this gap hasn't been closed, and I'd like to see that gap closed, this trend line tested, and then look for the short. So really, I'm just playing a really short-term move to the upside, and seeing, you know, and actually I might get my figures might not be quite right. We might only be about another 20 odd pips away from where we are. So it might end up being a 1-to-1 if we can get up there. And the reason that I've decided to take that trade is that Jerome Powell's out tomorrow. And the market does seem, you know, the market is probably more concerned with what's going to go on with the central banks than anything else. So even though trade in China, you know, between China and Australia is a bit of a flag, it's a bit of a red flag for us to start looking short. I think we probably have one more attempt to push to the upside before that happens. And I probably won't close this trade at the high. What I'll probably do is just move those stops to break even. And the reason for that is because the central banks are really front and center. I'd like to see whether there's a possibility of holding on, you know, through that. Now, it probably won't happen, and you saw me do that with the pound CAD yesterday. And any of you that were in the pound CAD from the show yesterday, during the US session, we closed the trade, the second half of the trade, at break even. So we made on the first half, made about 1%, I think, in total on that trade. But you know, and the same may happen with this. But I'd prefer to give something a bit of room and see if it will go, rather than closing closing trades in small little profit taking areas, unless I see, and that's the thing, you know, that the pound really was yesterday, it was really shouting out, close down this trade. You know, when you look at this this pound just then, I'll come back to the FTSE as part of the analysis later. But when we looked at the pound yesterday, we were in at 78, 1.2, 1.78. What was it? 278, wasn't it? 278. That was our entry there. That was our entry, and I was saying I was going to take profit at the low. That came down there, and the reason that I all of a sudden decided to come out of this was because this really was a bit of a defined trend line. In actual fact, let me bring this onto a more clear chart here, which is the one with the pivots. This was the chart from yesterday. And our entry was here, around about there, a little bit higher, and the target was down there. And I think we had stops around about the 38 level or something. Or was it 28? 28 or 30, I can't remember. Yeah, likely at 28, weren't they? I think that's where our stop level was. So the risk was about 50 pips, and the profit was about 70. So it was about a 0.75% trade in the end, because we taken half off down there. But this was the issue. You know, as soon as it came through here. And this is the benefit of getting a good entry. As soon as it came through here and started to come back and test it, then it was well worth just taking the trade off, because you know the daily pivot was still holding up, but the trend line wasn't. So at that stage, the other factor that I was talking about yesterday, where we might just float around rather than really going anywhere, started to come into play. And because of the negotiations, maybe we wait for the negotiations. But I still think it's worth giving yourself some room just in case it does break down. Now, you can take all of it off here, and if you've taken all of it off there, then you'd have got a 1.5 to 1 trade rather than a 0.75% trade, 0.75% trade for one. But what, you know, that 3/4 lost will not, in the long run, it will not anywhere near make up for all those ones that you lose by letting them go. You know, what I'm trying to do, I shouldn't say where, but what I'm trying to do is see if I can get a trade which just starts to rip. You know, I'm not really interested in trades that go 3/4% or 1.5%. That's not really what I'm after at all. I want to get a trend, and it does mean that you will give back quite a few trades. You're going to give back quite a lot of money, but you know, giving back 1%, 3/4%, 0.5%, but then catching a 3% makes, you know, those ones that rip, those 3% make up for all those ones that only resulted in, you know, a few losses and a few small gains, and some. You know, they make up for it and some, because if you can get a trade which is going, that's when you can start to add to a trade. So if you can get a trend which is really running, you can really start to add to it. So that's my thinking. The same with the FTSE. Now, probability is it won't go anywhere. I don't think the FTSE will result in much of a trend, if I'm completely honest, because there is some negativity out there. But if it does, then I'm already freebies. You know, if I can get up here and get a stop to break even, I'm already freebies. And if I lose that, then all I've lost is nothing. Whereas if I can break out and add, then I can start to double up and really catch you know, if it's possible to catch a really good trend, then I can maybe have a look at taking profit here instead. So I'm much more interested in adding than taking away. Now, it doesn't mean that you don't. What is also quite good practice is that you can take half off here, put the stop to break even, take half off, and if it breaks out and comes back, then you add another one. So the first trade is completely secure, break even. Sorry, it's not secure. So the first trade has made you profit, and then the second trade you're not risking 1% anymore because the first trade is in profit. So they almost become part of the same thing. So there's two ways that you can approach it. Now, yesterday, and really, the way you approach it, for me anyway, the way we approach it has to be dependent on what happens in these areas here. You know, so all my targets are soft targets. What's going to happen in this area here? If I see some weakness, then I will take half. If it bangs straight through, then I'll be kicking myself just to have put in a take profit area. So I'll give you the take profit lines, and you know, because you guys might have to get out to work, and if you have to get out to work, then it's worth just closing down half. The last thing you want to do is come back and find the trades just retraced on you. So it's probably better just to close the half and get the stops to break even. Not a problem. But if you've got time to sit in front of the charts and you can make a new judgment call in this area, then that is better practice in the long run. And what I can do also is, you know, if I have a look in this area and just see if it's beginning a bit soft, then I can possibly either take half and put stops at break even, or put stops at break even. You know, half is not really going to it's not really going to result in a great deal. It's quite nice to get a winner. So that's maybe you know, an aspect to it, that there's a psychological aspect to it. So you guys should be in profit now anyway. You know, the trade is moving, and the trade's moving quite nicely. So you're getting close to a 1-to-1. You're not quite there yet. Around about 10 pips away from a 1-to-1. But look how the trade's moving, because if we look at this 15, what we are starting to get is breaks of highs. So at this stage, there's not really a signal to suggest that this trade is coming back. And really, you know, our stops aren't completely safe just yet anyway. We could make them a little bit safer. If it was to take out this area down here, it's likely going lower. But right now we're okay. We can just wait for some price action, let it develop a little bit and see what happens. So that's the thinking behind the trade, and that's the thinking about staying in as well. You know, staying as long as you possibly can. Make your life a lot easier by letting those trades run a bit. And see what happens, because as I say, you know, you're going to give money back, and those odd trades are going to be irritating, but that's as much as they're going to be, just a bit irritating. Will I consider the pound Aussie a double bottom? Yeah, you know what? I was looking at the pound Aussie. You probably have been as well, Jeff. And I'll tell you what.
I have. I
Um,
closed my trades.
yeah, this is the thing about the pound Aussie. I was looking at this. The only issue is the Brexit negotiations, because there's no look at that actually. Yeah, this looks really good. I'm gonna have to just reduce the screen size a little bit so I can look at it a bit easier. But look at this on the pound Aussie. Fantastic little trade go, fantastic little entry here. Because what you've got really is a higher low now on the hourly, and you've got a fundamental reason for the Aussie to weaken. And that fundamental reason for the Aussie to weaken is that the Chinese have just banned their products. So how would you enter this trade is the question here. So let's have a look at it and see what's happened. So we've got this double bottom down here, beautiful spot, by the way, because that's exactly what I was looking at as well. I was looking down here and saying, yeah, that does look like a double bottom, and is this tradable? And I didn't know about the Chinese news at the time. But technically speaking, yes, you do have a W pattern down here, or a double bottom, and now you've got a higher low on the hourly chart, and you've got a reason. So how do you enter this trade safely? Well, my first thing would be, and again, this is where having a trading buddy is so brilliant, because Jeff has already my eye to hear this daily pivot untested, and I think Jeff probably, if I took this trade here, then I could almost feel him tutting in the background. So I don't think I would. I'd want to see that. I think I'd want to see that. And the reason that I'd want to see that, I think first and foremost, is that there's also a trend line there. So what would be a really good entry here is if this does come down and test, and it might mean missing it, but it's just, I think it's good counsel and good practice just to stay with the strategy, stay with what you think. FTSE's at take profit areas, by the way. Now you do what you will here. We got plenty of time in the day for me to talk you through what I'm doing. I'm not doing anything yet. I'm just going to wait for it to unfold. But the FTSE's at take profit right here. So if you want to close down half, then I will leave that to you guys.
Yes, Brian. To answer your question, I have closed my pound Aussie trade. Yes.
Yeah. So pound Aussie's closed. So that really does give us a green light for some upside. Now, in this area, we want to see this bounce. We want to see it bounce away, right? Now, that's the first thing you guys learn about the bounce, and the bounce is really important. Now, for it to bounce, it's got to touch first, and so far we haven't touched. Now, the trend line, if it comes close to that trend line and bounces, if it comes close to the daily pivot and bounces off the trend line, for me that would be fine. It'd be close enough to have hit close enough to the average price of yesterday to qualify. But at this stage, it doesn't quite qualify. So let's see if we can get something which will come back, bounce away, and then trade it. If we can get that, and watch out for it, because I may not have my eye on this. Where is it? One. I
will. Don't worry.
You'll have your eye. Okay, so Jeff will have his eye on it, and it might come in the US session. I don't know, but we're going to have our eye on this one, and we want to see this touch the daily pivot or the trend line and bounce away. And if it does that, then we've got something to enter on. Now, we wouldn't enter straight away. What we'd want to see, if that's our trend line and daily pivot sort of like round there, we'd want to see a bar that comes back and does something which gives us an entry. That's probably not even strong enough. It might even be sort of a bar that does something like that. If we get something that does look like a low test bar that bounces, then we can enter here and put stops down there, because it would suggest that now, as long as this bar is lower than this bar, because it might not, but by the time the trend line comes in, it's gonna. In fact, it will have to be lower. What we're gonna need really is stops under the daily pivot, and a buy stop order above whichever bar this would be. But we're gonna have to have a look at the bar. Let's see what it offers, and I'd want it on an hourly as well, personally, because I think this trend is going on way too long for us to then try and trade it off a 15-minute or half hour is different. I'm not a specialist in half-hour time frames, and I know it's very, very good. So Jeff might be able to get you in on a half hour, but I'd want to wait for an hourly. So I think it's a great spot, and I really like that. I really like that being flagged up there. Now, just before I hand back over to you, mate, because I know you've probably got half hour bars to look at. FTSE has broken through. So now here's the question. Why would you take profit on a trade which is breaking through a trend line? No reason, right? This is why these take profit areas have to be soft. Now, what can happen, what could happen is we might start to get some reversal bar and this becomes a false breakout. But we've got so much room now between our entry and our take profit area that all we need to do from this stage is move stops to break even. That in this particular point would be good practice. Let's move stops to break even and we'll take half if this starts to show that this is a false breakout, because it might take out a load of stops and then all of a sudden reverse. So from here, the way we're going to manage the FTSE trade is we're going to move stops to break even. Okay, so that's my next step now, and I will pass it back to you, mate.
Right, mate. Happy days. Let's take a look and see. I'll also have a look at pound Aussie. It looks like we should have been taken out of the pound dollar trade by now. I'll confirm that. And I'm certainly not displeased if that is the case.
Well done, by the way, Melvin. That's such a, that really, really good analysis on that. Really like that.
Okay, so yes, we have now been taken out of that pound US dollar. This one here, the daily trade, that I moved my stop to entry, and I did it for a real good reason. And
long FTSE, by the way. Sorry, long FTSE, right, Lewis. Just wanted to get.
Here's the reason. The reason is I can get rid of that now, just to get it off the charts. So we're out of the trade, right? Done. Yesterday, when I placed this order, I was looking at this account, and my analysis on this account differed slightly to the one I use in the US session, right? And what I had was on the US session, on this session, I had my chart here because I hadn't moved the bottom from where it originated, which is two equal lows, two equal highs. So that's where it originated. But then it became obvious to me on obviously the other chart that this was the level, not this level. So on the other chart, I'd move my range up to this area here, where it now is. So when I did my analysis on this chart yesterday, I saw a double top, and I saw a sequence of lower lows and lower highs. And I was willing at that point to suggest that we were definitely going to the bottom and maybe beyond. And that's why I was willing to take the trade short. But look what happens when I move the bottom of the rectangle up to there. We've now actually come off the bottom, and potentially we've got higher lows here. And that's the reason I don't want to be in the trade, because I've taken a short in a position where I'm looking for a long. And the very worst thing that can happen to me as a trader is to get my analysis wrong and it costs me. So that's why I don't want to be in the trade beyond the entry. And I've moved my stops to entry for that reason, and happy to be out of the trade now. As we always say, I'd much rather be wishing I were in than wishing I were out. And I believe my analysis was incorrect yesterday. And for that reason, I got the opportunity to correct it before it cost me money. And that's why I did it. So anyone who's got questions around that, then happy days, only happy to answer them. But that's exactly why I did what I did. And look, I'm not over this yet by any stretch, don't worry. But I am looking for longs now, not shorts, because we are bouncing off the bottom here. If we get a massive rally up to here, then I can look for shorts. But no, if it goes, it goes. I couldn't care less. It would have been a fluke if I'd won that trade if it goes short. Cheers, Lewis. Yep. Happy driving, mate. Happy driving. Pound US dollar daily. Yes, that's the one that I'm now out of. What about the pound on the hourly? If we get a retest on US dollar yen, monthly pivot isn't an entry for short, Jeff. Okay, hang on a sec. I'll have a look at that. What does the acronym OCO stand for, Raymond? It means one, cancels, other. So on our hourly trade here, on a breakout trade, what we're looking for is an entry either long or short, not both. So if we get an entry long, we cancel the short. So this one cancels that one, and obviously the reverse. If we get entered short, we cancel the long. So one cancels other. Compare the trade on pound Aussie to euro Aussie. Same, mate, pretty much the same. I'm not a fundamental trader by any stretch of the imagination. But when I see something that I can't ignore, I have to say, I've got to take advantage of that. The one thing I don't understand right now is why the Aussie is not 100 pips lower. So maybe something else is going on. But pound, it's not about the pound Aussie trade. It's about the Aussie. So I've got 3 or 4 different scenarios that I'm going to give to you very shortly on how I want to take advantage of this. And it's not necessarily pound Aussie that I'll be looking at. In fact, it won't be pound Aussie. It'll be Aussie Kiwi and it'll be Aussie US dollar, because I think both of those currencies have better credentials than does the pound versus the Aussie at the moment. So the euro, exactly the same. I think the euro and the pound are probably among the weakest potential currencies. And I think the US dollar and the Kiwi, and I'll explain the Kiwi in a minute, are the stronger contenders versus the Aussie. Why the Kiwi? Because the Kiwi and the Aussie track together pretty much. Both commodity currencies, both subject to trade deals with China, except that this trade deal that's been pulled on Aussie by the Chinese has got nothing to do with New Zealand. So for that reason, my logic comes into play and says, well, okay, if the Aussie has just been penalised against China, but the Kiwi hasn't, that to me equals Aussie Kiwi short. And that's the one I'll be concentrating on, Aussie Kiwi and Aussie dollar, because as I explained yesterday, I think the dollar's got a little bit of room to the upside. The risk is to the upside. And for that reason, both of those are preferable, in my humble opinion, tradable assets rather than pound Aussie or euro Aussie. But exactly the same applies, because it's just not as strong a signal, in my humble opinion. If I have a look at the euro Aussie, and we've been in that for more than a week. In fact, we've been in it for weeks and weeks and weeks on and off. So I'm a massive fan of euro Aussie short. But when I looked at this morning, I saw a break and a retest of the resistance trade line. Said to my guys, there's a trade here, but you'd have to be willing to take the weekly pivot on, and there's not a whole lot of room for profit. That's probably still the case. And similar to pound Aussie, you've got a clear double bottom sitting here now. You've probably got a clear higher low as well. But again, trading that at that level is not really what you want to see. You just want something here that's a little bit better. And what Ash was talking about earlier is exactly the same on euro Aussie. But I think euro Aussie, pound Aussie is exactly the same trade. Exactly the same trade. So you could take your pick. If you choose the euro and the pound to trade against the Aussie. I don't choose those. I choose the Kiwi and the dollar. So let's have a quick look at those. Both set up, sorry, not so much the Kiwi, I don't think, but the Aussie US dollar set up this morning as a break and retest, double cross of the weekly pivot, right? And again, we had options this morning to trade any one of the, and this was technical. This is before I even heard this news. We saw these setups. I heard this news around about here somewhere when we were already taken into the trade on Aussie CAD, which I'll get to in a second. But I thought Aussie CAD, Aussie Kiwi, Aussie dollar were the 3 potential trades for this morning. And we chose Aussie CAD, but we could easily have chosen Aussie dollar, break and retest of the weekly pivot, entry under there. You got a very swift ride to the downside, and you would have been counting your coin at that point. But for whatever reason, this turned around and came back pretty much to entry where we are now. Well, above entry actually. But the weekly pivot's the key here. If price were to get above the weekly pivot here, and I've got absolutely no idea why it would, but if it does, then clearly something else is going on other than what I'm seeing come out of China and what I believe is potentially, well, this is another trade war, isn't it, really, at the end of the day? Because we've got our Prime Minister, Australia's Prime Minister, saying, you know, investigate this coronavirus. Where'd it come from? Tell us all, blah, 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 blah.
That's the
And the
problem, isn't
Chinese,
it, mate?
yeah,
You know, the walls are starting to close in, I think, a little bit on China. And the problem is, you know, certainly for Australia, is that maybe the only country that has really got the power to do that to China, which is America, seems to have maybe softened the rhetoric a bit. I mean, you know, they're even talking about signing the next part of the trade deal. So I don't think
really,
Australia is probably, yeah. I mean, it's, you know, they've certainly I don't, you can't say they've let everybody else down, but you know, they almost started by puffing their chests out, and now you've got a country like Australia which is picking up the baton, but probably not in such a strong position to really fight the fight for very long before it actually starts to genuinely hurt their economy.
yeah. Look, the real number of this, and they're putting down to technical issues, right? And maybe that's why the market has bounced back, because the detail of this ban on four abattoirs in Australia, and which produce 35% of China's imported beef out of Australia, right? So it's substantial, it's significant.
Yeah.
And China is saying it's because something to do with labeling, and nobody believes that, except, and that's why we saw this bar this morning. But apparently now the rhetoric turns into, okay, this really is to do with labeling and not to do with sanctions. But I don't believe that for a second. So I think on balance, if I'm not short the Aussie, I'm a nutcase. I can't not be short. I was bearish before I heard this. So why wouldn't I still be bearish? At least down to the monthly pivot anyway. You know, and we've got a clear double top here. We're really looking for a significant lower high at the end of the day to trade this. There was an opportunity here to trade it this morning, as I said. I didn't do that, but what I did do was trade it on Aussie CAD. Exactly the same scenario, break and retest of not only the weekly pivot, but the trade line, which is why I chose this one. And I'm still in this trade, but it doesn't look fantastic right now, I've got to say. If I wasn't in this trade, I'd probably put an order under here. I also said to the guys, there was a trade on this bar here. We could split this risk and go 50% of the risk here, 50% of the risk here. So trade this little bar. I don't know if anybody did. I didn't. But had I done that, I would have already taken my profit and I'd be happy days. But I'd be almost looking at getting out at the moment, wouldn't I? So this is more tricky than meets the eye, or trickier than meets the eye, sorry. And I don't know why. It shouldn't be. It should be very clear cut, because we have got a structure in place that allows us to go short. We've got a position there, a setup that allows us to go short. We've got a fundamental reason to go short. Yet here we are. Why? Don't get it. What else is going on that I'm not seeing? So am I willing to add to my position? Yes, I am. I'm willing to take on more risk into this. I just need to find a good reason so to do. Maybe this is it. Maybe this retest here is just what we need to see. I'm not 100% sure on that. Or maybe there's a better setup on, what do I do with Aussie Kiwi? It's disappeared. There it is. Aussie Kiwi. As I said yesterday, I think it was in the later show, if we can erase that candle, and of course we can't, this trend line looks absolutely superb, and a close below here on this bar in an hour and a half would be very bearish in my humble opinion. Now we've got the test of the daily pivot. It takes away all fear that I have of going short, given the right circumstances. We've got a daily pivot test on that. We've got a daily pivot test on Aussie CAD, and we've got a daily pivot test. Now, we haven't got a daily pivot test on Aussie US dollar. So for that reason, I'll sway away from Aussie US dollar. I'll go to Aussie CAD again, and I'll definitely go to Aussie Kiwi if I can find a reason to trade them. That bar there, if it were to close just on or below, even if it closes roughly where it is now, I'd still look to trade that short. I like it. That's my kind of bar, to be fair. And don't forget, we've still got the 3 little Indians that have now turned into two little Indians and 2 chiefs. Or is there a sub chief? Not sure. But it's still giving me the indication that we're headed to the monthly pivot in some time frame I don't know of yet. That's the only thing that I've got an issue with. So look, massive bear, the Aussie, massive. If I can find my way in further than I am at the moment, happy days. But back to the initial question, Euro Aussie, pound Aussie, I think they're exactly the same trade. Pick your poison. My poison doesn't rest there. My poison rests in the Kiwi and the dollar and the CAD against the Aussie. So, gee whiz, that was a long explanation, I know. Okay, Raymond, yep, got that. So, Lewis, there's my answer to the question. Thanks, Brian, to many of these trades. Okay, cool. Taking full profit on the FTSE. Shukri, well done. Full profit's always good. Can't go broke banking. Is because of COVID-19 investigation against the Aussie, Chandra? Yes, almost certainly, mate. It's a retaliation of it's war games. It's trade wars. International community investigate COVID. Yep, very true. So, have we got a trade? I guess we can go back to that point. And would I trade Euro Aussie long? Yeah, I would. Absolutely, I would. Do I have a setup? No, not at the moment. I don't want to trade straight into the weekly pivot, so I'll just move on. Pound Aussie, let's investigate that a bit further. Ash has already given a great explanation of what he's looking for, and certainly I'm not dissimilar. But there is one thing I would add to that, because my strategy is just a little bit different. Let's borrow that trade line there and put it up here. This will be the same trade line Ash had, or very close there too. This is the 30-minute chart. And interestingly, we've now come back inside that range. But what we haven't done is test this level, as Ash pointed out. And that's what we want to see. So for me, I want to see price come down to here and actually break the trade line. So this is what I call my insurance policy. Ash wants to see it test the trade line. Happy days. And I get that, because it's going to do one of two things. Initially, it's going to bounce off here, or it's going to break it. The question is, will that break be a genuine break, or will it be a false break? And for me, I want to see the false break. I want to see price go to here, consolidate, get back above the level, then retest it, either the trade line or both the trade line and the daily pivot. That's my signal to go long. Until that happens, and I agree with Ash 100%, too early for me to go long here right now. Love that bar, absolutely love that bar to trade long, but the daily pivot retest is definite consideration here, and I wouldn't like to go long until that happens. I don't have a lot more, except I do have a look at dollar Sing. You know, we traded this last week, Thursday late, in the late show, and we got a nice little 30-minute trade-off, thanks to Ash, who pointed it out. And now I see we've come straight back above this down, well, is the resistance trend line. I can't remember what it is, a channel, it's the top of a channel. It's very, very interesting here, because we've not gone to the bottom off this bounce. We've gone straight back to the top, and we've got a higher low. I've got in my mind that we're going back to the top of this ascending channel rather than the descending channel. Now we've broken it twice. So with that in mind, I'm looking for longs. So this break and retest of the monthly pivot gets me interested. Have I got a confluence to trade that with? I don't really need one because generally I like to trade this anyway. But there's your confluence right there. This is eminently tradable right now, in my humble opinion. So let me see if it's actually a trade or not. There's your problem. We've gone a little bit further down. But if we were to put our stop there, or maybe even there, underneath the pivots, so 54 pips of risk, I'm aiming for the top of the channel. We're not quite there, but we're nearly 1-to-1. Have we got any chance of going through that level is the question. So we've got lower low, low high, low low, low high, low low, lower high, higher low. If we were to turn that into a higher high, we've probably changed polarity and potentially going long. Is long a silly thing to do? Big move during 2020 thus far. Gee whiz, I don't know. Fibbo fans, give me a leg up here. It's a 61.8 retracement on that move. It's probably a 50% retracement on that move. Is it enough? I've got to say it's interesting. So I'm going to go with it. I'm actually going to place an order on this on the 4-hour chart. And it's going to be a breakout. It's going to be a breakout trade of this trend line. So it's a double cross, break, retest of the monthly pivot. I prefer that to happen on the first occasion, but it's really the one that's question mark, but I see upside here. So therefore I'm going to take the trade. Let's place it. So it's dollar sing long. Just, minimal risk. You don't want to be putting too much on this. What have I got to rate? I'll rate this a 5 out of 10. It's a buy stop. The entry level will be 142. What's the spread on this? Say 3 pips, 142.07. I know there are a lot of questions, guys. We'll get to them. 142.07 is your entry level. Your stop loss, we're going to sneak it underneath the pivots here. So the weekly pivot is at 141.54. We'll sneak it a couple of pips under there. So 141.49 will be the stop loss. $141.49. Okay, I'll put that up in the screen shortly, guys. Not exactly now, because I want to get back to Ash, see how that trade's going. But there it is. The trade is in the market. I'll put those levels up very shortly. And dollar sing long. It is a bit messy, I've got to say, but I'm liking the interaction off the top of this line here. It's quite interesting. So Ash, back to you, and I'll put those parameters up. And we'll come back when you're done.
Yeah, great stuff, mate. Okay, well let's have a look here. If you could throw me the screen.
Yay. There you go.
Thanks, buddy. Now, the FTSE has just come back off the trend line and the daily pivot. So really, at this stage, now the price that's come back, it hasn't quite tested, which is going to make this a little bit tricky. But just to make things just a little bit safer, it might be worth. Let me just take my lines down because we don't need to see these. It might be worth having a look at your 15-minute chart here. Now, if you've managed to get your trade on in 2 parts, the seconds, in fact, let me give you it in your on your language instead. Here we go. Right, so your entry was at 30, which is down there. Now your stop should be a break even on that on both parts of the trade. Now you can see that there's there's been a bit of a pushback down here. This line's in the wrong place because it's going from the futures instead. So it has rejected that level, and obviously, another entry above this bar would look attractive, but it's not really the sort of practice I like to. I wouldn't want to do that, and the reason I wouldn't want to do that is, why would the market explode today? And I just don't think it will. But if it does drift up, the likelihood is we come back and test, and that's what I'd want. I want it to come back and test. Even if it did explode to the upside, I'd still want it to come back and test the area rather than trying to get in at the highs. I really don't like getting in on breakouts. The only time I may trade a breakout is on the downside, but not on the upside. It's just from the analysis I've done, it doesn't tend to work out very well. So at this stage, probably the best thing to do would be get your stops up a little bit further, just to grab a little bit more profit out of this. There's a slight issue because this area hasn't quite been tested. So it might come down and just take those stops out at that particular point. So that's the only problem. And what I prefer to do is, and it does mean giving back. And I'm not suggesting that everybody does exactly what I do, because I'm looking really for something a bit longer term, even though I have my doubts about whether it be created. But I can't predict the market, so it might all of a sudden go for whatever reason. But what I'd like to see is it close down here. And if it closed down there, effectively almost, showing me that there's some genuine weakness on the 15, I'd like then to close down all the trade. Taking half in this area still isn't a bad option. That's not what I'm going to do. But if you take half in this area, that's not a bad option. But then after that, if you have taken half, there's not an entry now in this area. That first leg is really done, and you'd really want to switch back to a longer term time frame, an hourly or a 4 hourly. Let it close above. See if it closes above that area, and the add point is going to be here. But it's only going to be here if we see a bar that breaks and holds. It's got to be a bar that breaks up. Sorry, let me use this tool instead. It's got to be a bar that breaks up and holds that area first. And then if it comes, if it comes back, then we trade it. If it doesn't come back, we've already got the first part in the market. But I'm watching this because there's every chance it could fail here. So I'm really watching this on a 15-minute time frame and seeing whether that 15-minute bar that we've just had is going to give way. Now, I'm not that keen on placing stops in an area, and the reason for that is. And I'll explain that in a little bit more detail in a second. But the reason that I don't like placing the stops in the area is that I might end up seeing a bar that looks like this in this area. What might happen happen down here is that we might get something that looks something like that. Which leaves us right back. Or in actual fact, probably not like that. Probably more like this. Come down, test this area down here, but then end up doing that and closing above, taking all the stops out and then going. So that's the reason I don't like having stops around here. But that doesn't mean that I am not going to take my trade off if the price closes down here. But I've got the opportunity and the time to stay in front of the charts and see how it develops. Many people don't. So if you don't have that time, you really have to place a stop on this level here. You've got to. You don't really have a choice. But I'd like to see things develop. I'd like to see whether there's actually a genuine breakdown of a trend. And if there's a breakdown of a trend, then then I can close the position. And it's the same down here. You know, all those stops I will give you, I won't use those stops. I will use it visually. I'll have a look at the chart visually and say, okay, well, that's breaking down. And if it comes down with some momentum, then I might close it, mid-bar. But generally speaking, I want to wait until the bar actually closes, just because of all that stop hunting that goes on. Now, that is a different concept for you guys, but it's just kind of explaining that the way I like to do things, and you have to be aware, and you have to recognize that you can lose more than 1% on some of those occasions, because it might just come down and really kind of like end up closing way below. But over time, what I've kind of worked out is that because because trends don't change direction as often as we might think, if we have a trend in place, that the bottom might well get tested, but the thing is, if we're putting our stops here or here or here, what we're effectively saying is that we have found the low. Now, I don't think for 1 minute that I've necessarily found the low. There might be another spike down on a bar, and that might end up being the low. And that's the reason that I prefer just to let it unfold. Now, you have to do it on shorter term timeframes, because otherwise, if you do it on a 4-hour chart, you get in all sorts of trouble. So you have to really look at it on shorter term timeframes. But I like to see how things develop before I close trades, and I like to close them visually rather than by telling the broker to close it. Maybe some of that comes from the lack of trust of brokers as well. I don't know, but certainly it's not that I'm not saying that there is a stop down here, but it's more of a soft stop, in the same way that I've got a soft target. I'll use both of them and just see how things unfold and develop, because things can come down. I don't know where the low end of this is, but I do know that if it closes under this area, that's going to start looking fairly negative, and I'll still have a bit of profit out of that as well. I've got a free trade on the market now, so I can really just relax and let this one do its thing. I am not trying to make I don't know, 20 pips or something out of a trade. I want to see if I can get a 200 pip run, and the only way I can do that is by recognizing that the market is not perfect and it's not clean, and it will do things that spike and react off certain news events and everything else. I'm interested in the close. Not the spike. The spike for me is all noise. I'm just interested in the close. And so far, what I've really got is a close above the level, closing below the level, and attempting to get back above here now. Which probably, if this closed up here, would you say that would be an entry for some downside there, Jeff? If this closed on this trend line, that down there would be an entry for some downside, would you say?
Yes, it would. What chart are you on there? 15. But, what I like to see, Ash, is a little bit more time spent above the trend line before it comes back.
Yeah. So wrong chart to look at, really.
Yeah. 30-minute chart's going to be worse, but after the break, I like to see at least 2 candles of consolidation above the trend line.
And this is the thing, when we look at that 30-minute chart, it's actually above, isn't it? I mean, it's, and that's if the trend line's even there. It might be lower. This is where the touches are. So all it's really done is come back and retested the level, and it's retested a daily pivot, and this may well continue to the upside, which is why I don't want to stay in the trade if it comes down here. But because my entry's down here, you're right there?
Yeah, I lost you for a minute.
Oh yeah, because the entry's down here. I don't need stops up here. My stop's already, it's well out of the way. But if I get a close under this bar, or if it spikes, I'm safe. But if I get a close under that bar, I'll close. If I get a spike and it closes me out, I close out. But the distance between here and here is so minute that that it, I'm not really that bothered about having the money to go and buy a packet of fags. Not that I smoke cigarettes anymore, but or certainly when I'm in the UK anyway. But I'm not interested in having that kind of money. I want the chance to be able to go out and say, look, okay, now there's there's some decent money behind this one now, and we can consider that point closing it. But in the early stages of a trend, it's kind of better on most in most respects to give it some room. Now that doesn't mean I've got any confidence about this, because I don't. In truth, I think that the whispers out there are pretty negative, and I've got no reason for this market to go up, but I've got loads of reasons for it to go down. But I'm at this particular stage, I'm just trading the trend, and I am trading the fact that that we've got a Fed chair out tomorrow, and that is the significant news for the week. Even the stuff with China and Australia isn't that significant when it comes down to the global equity market. It will hurt the Aussie 200, no doubt, but when it comes down to the S&P, the Dow, the Nasdaq, and the FTSE, the DAX, and maybe even the CAC on, it's not that big. But Jerome Powell, that's the big ticket item. So can I stay in this long enough to kind of listen to that big ticket item? Well, yes, I can, because my stop's at break even. So I can do what I want really at this stage. So that's the idea with that one, mate. And just on SWE.
There's a few questions there we need to get to before we rack off.
Yeah, sorry, Shukri took full profit on the FTSE. If it retraces and I want to get back in, should I wait for it to bounce off the daily pivot and go above that long? I wouldn't, mate. I don't know. What's a Marubozu bar? I've never heard of that. I like the sound of that. One. Yeah.
Sounds like you can have some fun there.
Yeah, that's a new one for me, mate. I don't know what the Marubozu bar is, but I love the sound of it. If you could describe to me the anatomy of a Marubozu bar, I'm going to use it in future. I love the sound of it. It's brilliant. I don't think you can re-enter until you get a genuine break now. Personally, that wouldn't be my game. What I'd want to see now, because what I was talking about earlier was the 4-hour chart, right? Because we were really trading the 4-hour trend. Now you may well be looking at a different trend, but if you're trading what I'm trading this 4-hour trend. And what I've got is my first entry off a retest of the lower end of the structure on the 4-hour chart, right? Because this is what we had. There's the trend line on the 4-hour chart, and because that's the trend line on the 4-hour chart, I just wanted to see whether there was an entry long from there. And so far we've got one, but now I'm still in this area. I'm still in this phase, if you like. So now for me to kind of like consider adding to this, it's got to get through this. It's got to get through that phase there. And if it gets through that phase and then comes back, then I can add, somewhere around here, or and I'll do the same thing. I'll look at the charts. Where do they? Is there a suggestion that it's halting and starting to reverse? And if it is, then I'll add and I'll go long from that point. But if it doesn't, then I'll just manage the trade that I've got. So if you're trading at a 15 minutes, I don't know what time frame you're looking at, but let's say you're looking at the hourly maybe, then the hourly is still in phase 1 as well, because all you've got with the hourly is a breakout of this area. So even the hourly, and this is why it becomes problematic, because even the hourly coming back and testing this area is going to take me out. But so be it, because I'm trading the 4-hourly. So that's that's the time frame that I'm looking at. But even if you're trading the hourly really has to get above this point here and close and retest for you to consider a re-entry. It's got to get up here and close somewhere up there, and then come back, and then you can think about adding there. That would be okay too. Now, if you're trading the 15-minute, then you're really trading right into a higher time frame potential resistance points. So it wouldn't be wise at this stage anyway to be adding. You know, if you were going to add, then it's going to be, you know, maybe off this bar here, I guess. But you're trading right into resistance points here. If that's where it is, it might be down there actually. So that is not the time for me to be adding. You know, you really, this has still got some work to do to really get going. It hasn't got going yet. If it gets going, then we'll consider adding. If it doesn't, then we'll be out of the trade at no loss. But right now, it's going nowhere. And I think it's got every chance to not go anywhere, and potentially even turn around and give us a short opportunity. So nothing to do on that one.
Best description I can give you, Ash, for a Marubozu bar is a decisive bar that closes on its high or its low.
Okay, and is it a breakout bar?
Doesn't say that. It just says it's the name of a Japanese candlestick formation used in technical analysis to indicate a stock has traded strongly in one direction throughout the session and closed at its high or low.
Okay, all right. I like the sound of that then. So that's a Marubozu bar there, I suppose, and one there and one there. Never heard of it.
No, nor have I.
What is it? Because they normally have an English translation. What's the English translation?
That I cannot see anywhere.
See that might be a bar.
I'm looking at Investopedia at the moment, and the definition from Investopedia is this: the black Marubozu, actually we're saying Buzo, it's Bozu. The black Marubozu is simply a long black, down or red on the charts below candle with a little or no upper or lower shadows. The pattern shows that sellers control the trading day from open to close and is therefore a bearish pattern. Candlestick can provide a trade signal or analytical insight into the future, blah, 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 blah. So no, it doesn't.
Okay.
It doesn't give you an alternative.
All right, so I'm gonna wait for that one to unfold.
Still lots of things to look at.
Oh, what's that mean?
That we've still got lots of things to look at. Want to stay in your charts whilst we have a look at them?
Yeah, just one more thing I want to talk about, and that's gold. Gold is the last thing that I want to discuss, and you know we're trying to get into some gold, but the first issue that we had with gold yesterday was that it didn't quite come down far enough to give us an entry, or to consider an entry, I should say. Really, it was close, but it didn't quite get there. So what I'm looking for with gold, again, is on this 4-hour chart, and what I want to see with gold is it break through here. I want to get through that area there, really. Let me just make sure that's the right bar. No, let's just do this on the hourly. I want it to get through here. If that can get through that point, then gold for me would start becoming interesting. Until it gets through there, then I think we might well be in a bit of noise. And my problem with gold is that some of the longer term patterns still look a little bit concerning. So I want gold up here above, and then some sort of retest of the area, and then I'd like to see if we can get a long in gold. But without getting through this level here, then I still think that gold has got a chance of still breaking to the downside. There's no doubt that it's a bit messy, isn't it? It's a bit messy. I mean, the reason I want gold is again because of some fundamental the fundamental situation. It's got nothing really to do with the charts so much just yet, but I'd like to get some gold if we can. Ideally, we want it to break down significantly. Whether it's going to do that, I just don't know. What people have been talking about 1850 with gold, and I've got a tendency to agree with them. So
it was very near the Great Australian Gold Rush, 1851.
1851. There you go. So it's even more reason to get to 1850. I'd really like to get some in the portfolio. So we'll see if we can pick up the gold trade somehow. At this stage, it's not there. This daily pattern is going to be a bit problematic for the hourly trade. But you can see that at least we'll get some room if we can get in down here. At least we'll get some room before we get up here to potentially get the breakout with gold. So I'm just sitting and waiting to see whether we can get something with gold. What the other thing I really like about this trend line is that it's likely on a 4-hour chart that we will then be creating something of a higher low from that point. Sorry, a higher high from that particular point there. So looking at this the way it's shaping up now, it looks like it may have to touch this line, come back, and then see if we can get a hold. And if we can get a hold there, then I'm going to try and trade it long and see if it can go through and aim for that upper level. And then we can, manage, think about how the management will go with that one as well. But again, it's going to be one that if we can get in, we'd want to hold on to, just because of the way that the world is right now. To have some gold in the portfolio would be fantastic, but you've got to be able to get the best price, because gold's still got a pretty good chance of clearing out. And I'm pretty sure the seasonals are fairly abysmal on gold in the next quarter. I will double check that, but I'm pretty sure they're not great. Yeah, might have to be careful with this one, mate. Might even be the case that with gold, we're going to have to very, very lightly scale in, unless we see an absolute obliteration of the markets. And the other thing with the markets as well is that there are some cases. Somebody brought up some news from Wuhan and somewhere else yesterday, saying that there's been, in Germany maybe, there's been another flare up. And there's no doubt it's causing some concern. It really is causing some concern out there. So I think because that is in play, it doesn't seem to be the case that it's driving the markets down as yet. And, poor jobs numbers, poor ISM, poor manufacturing data, everything's awful. And yet the market's holding on. So what drives it up? I don't know, but I suspect we might get a hint of it tomorrow.
Stranger things. Mate, I told you I'd keep my eye on Pound Aussie for you. You won't like the candle on the 30-minute chart.
Okay.
But we will have to have a look at these questions.
Okay.
So we might as well stay on your chart. If you can bring up Richard, I've taken that's Shukri's question. US dollar yen. Yeah, what?
Yeah, okay. Sorry, we'll get to that. Yeah, the Aussie. I like the look of the level. So just got to develop now, isn't it? Yeah, US dollar yen. Let's have a look. Okay.
Yeah, this is Brian wants us to have a look at. Was it Brian? I think it was Brian. Dollar yen H1, yes. Starting to look good to me, dollar yen. Starting to get excited.
Yeah, interesting. This is a what's that bar called again?
Oh shit! No, it's not called that. Marubozu.
The Marubozu bar was would have been yesterday's, right?
Yep.
Yeah. So I'm coming out to this point here. So got to have a look on the daily with the dollar yen. And when we look at this on the daily, there's the breakout point there. So certainly a suggestion that it's got to come back and test. But that's the first thing I see, is that that we've broken to the upside with a pretty strong bar. But we've got a higher high on the daily. So that's the first thing. I'm just going to check the weekly very, very quickly. Yeah, and you look at this on a weekly as well. Looking at that on a weekly, I think the big problem with the weekly is I don't know why it's bounced there. It's still got some room to go to the downside, and this is definitely still in a downtrend, and it looks like there's a horizontal level there. So, is this for a short or for a long?
I think he just wants analysis on it. That level that you just spoke of is bang on the monthly pivot.
Bang on the monthly pivot.
Level.
Okay.
Yeah.
Okay. Let's have a look. Okay. Yes, I see. Oh, yeah, that does look good for a downside, doesn't it? Okay.
Mm-hmm.
All right, let me just see something here. Yeah, that looks good. That looks good. Now, we've got the daily pivot down there. It's a bit of a shame on the entry, isn't it? Because we might be a little bit late to really
I
take
haven't got any
advantage of it. Oh, you've got no entry. Okay, let's just see.
Not yet.
Bouncing away from the monthly pivot is good. This daily pivot is problematic. But let's see what we've got with these bars here.
The daily pivot's a problem until it's broken and retested. Then it's an asset.
Yeah, then it's an asset. Yeah. I don't love it. I've got to say, okay, I'll tell you what, actually. I'll tell you what. Where I think this is pretty good. There's a few things up here, but let's just consider the bars for now. This bar is a great bar. That's a really good bar. This area is not a great area. So I think if you're going to trade this, going above this bar, so, I don't think you'd have to get to the highs. I don't think the stops would have to be at the highs. They're probably close enough to have them at the highs, and then you can see if it closes above that area. So maybe it's 107.80 would be a decent place for a stop. The way I would probably look to trade it is just on the trend line. I think if you've got belief this is coming down, and it's got good reason to come down. It's broken through the monthly pivot. It's got a little trend now to the downside, lower low there, lower high here. Any pop back up again would suggest that it's a decent point. So yeah, 107.52 I think is a good entry on that, with a stop at 107.80. Now Jeff is going to probably give you a safer trade.
4 hour, mate. Because if you go the 4 hour, I'll show you the safer way.
Okay. All right.
My way.
Let's do that. I think it probably would be safer, because I think my problem with this is definitely some of the longer term time frames. And we're going to come back to something in a minute. Okay, 4 hour. Yep.
Okay, so if you draw a trend line from what's that date? Let me see what the date is. Hang on 2 secs. From about the 9th of April, you'll see a little high there.
9th of April.
Going through about the 22nd of April.
This one, or is it?
No, back a bit. Yeah, up above, near the weekly there.
This one here.
Yeah, there's a high there somewhere. So bring that down across there. Yep.
Oh God, yeah.
So if we get underneath the daily pivot and then come back and retest it, there's my trade there.
That does look a lot safer. That does look a lot safer. Yeah, I think you're right. If it gets under that trend line, then there would be a potential move down from that particular point. It is a bit of a problem, because really the way this is facing is up rather than down. And this is a buy zone, isn't it? At the minute, and this is Jeff's point, really. This is why this is a great area to look for a trade, because this area is a buy zone. If it breaks down, then it becomes a sell zone. Support becomes resistance, and resistance becomes support. So while this is a buy zone on the 4 hourly, and we're seeing sell zones on the hourly and all that sort of stuff, absolutely fine. But really, we do want the 4 hourly to get in a higher probability trade. So the 4 hourly does this is a buy zone right now on the 4 hourly, and it might be that this just continues to roll to the upside. And actually, at this stage, you're looking for long, not short, even with the weakness on those shorter term time frames. But if it breaks down, then you're looking for short. So I would agree with that. And I think going back to the short term time frames. And I want to show you something in a moment on the FTSE. Going back to the short-term time frames. What you've really got here is a higher low. Now it's a massive issue, because you've got the monthly pivot in the way. So trying to get in a long here is going to be really difficult. but you've got a higher low there, you've got a pretty strong bar there, bit of negativity coming into play here. But this is a buy area. Be better if it had tested this point first. But in actual fact, that might be worth waiting for. I'd say looking for the long, you want it to come down and test that area and bounce. Looking for the short, you want it to break through that area and bounce. So either way, this is the point of interest. Nowhere really, this is just flap, isn't it?
Mm-hmm.
It's just a lot of fluff. So the point of interest has to be the trend line and the daily pivot, 107.30. And that's the benefit of having, you know, more than one set of eyes on it, because I might have suggested something completely different. But now actually when we scroll out and get advice from somebody else, i.e. Jeff, then we sort of, you know, then I start going, okay, actually this is the point of interest. The daily pivot is the key area, and we need to see how it reacts at that area. And get, you know, and as long as there's some buying going on here, then there's a green light to go at least back to the monthly pivot. If it breaks down, then it's going to come back and go that way. Now, again, this is probably going to be about Jerome Powell tomorrow. You know, we have a lot of this.
And chances are we'll go in between those pivots until that happens.
Exactly that, which is why this is such a good point of interest, and why I think the long is still on down here. You know, that's my first thought. Can you get long? Can you get long down here? That should be your first thinking, not can I get short? Because if you start thinking about the short, the temptation is that you just enter under there. And I'll show you why that's a bad idea in a moment. But what you should be thinking here is long, 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 bang, short, 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 you know? So use this area to your advantage. And look out for that, you know? That's definitely the point of interest, 107.29, 107.30. And I'm going to show you why just entering trades short is a bad idea, just of a break of a level, and why, just to illustrate back to why my what I do with my stops for me is important. Look what's happened here. It's broken down this area. Now, if you'd move stops up under there, now you're not in the trade anymore. When it's and not only you're not in the trade anymore, but you're not in a trade anymore on a pretty good buying bar. And if you'd entered a short there, then you've been turned around. So that's why I personally don't like shoving stops nice and, you know, when it's a break even. But that's why I like kind of what would be the word there, mate? I guess imaginary stops. I guess it is imaginary stops. That's why I like an imaginary stop here, because now, you know, I'm just waiting for it to close. If I continue to see weakness, then I will close down. The probability here is that I'm probably going to end up having to get taken out at break even rather than getting the opportunity to close. It's getting a bit low down here, but now we're seeing these areas. You know, it's not closed under this level. Until it does, I'm in. I'm staying in, and I'm staying in at full whack. Because it's still a buy zone. You know, buy zones, but you know, it will make it really obvious when it's a sell zone. So there's the same with the dollar yen. But, you know, just back to that, and I was only just bringing you this analysis just to reiterate the point here. The dollar yen, this is still a buy zone. So you must look at it as a buy zone, and then look at the look at that as a potential
You're going
change.
to be in trouble. I can see what's coming.
What's that with?
I heard a little murmur behind you.
I have got a little visitor. Yeah, do you want to say hello to everybody?
Hi.
Hello, darling. How are you? Are you good?
And everybody else. Say hello on Molly. Well, that put her off. All right, I'll see you back in a minute. All right.
Scared her for 5 minutes. You know, you've got 5 minutes.
Right. Anyway, mate, that's So that's the analysis on. Oh, okay. So Brian, I went in on the high testing the monthly pivot and resistance line. I went in. You went short. I mean, I don't think that's the worst trade in the world, Brian. To be honest. You know, and I'd have a target down here, because it seems to me that you're probably trading a short-term time frame. So that's not the worst trade in the world at all. What time frame was that on? What's the yeah? What's the time? What time frame you looking at, mate? What's that? What's the high test bar on that on the
While
H1?
you're waiting for that, I'll just answer a couple of questions that I had directed at me. Aussie seems bare, right, from Chandru. Absolutely. Absolutely, Chandru. I'm an Aussie bear short term. Before we sign off today, can you advise what became of the query from Raymond with A2W for us to pick the show up via Zoom? Okay, here's the honest answer, Raymond, and we try as hard as we possibly can to be 100% transparent here. If it was a subscribed show, this show, we would offer it on Zoom. Because it's not a subscribed show, one of the intents is to build an audience, our YouTube audience, right? So if we gave you access to the show via Zoom, then nobody would be watching it on YouTube and we wouldn't have a YouTube presence. So it being a free show, we feel that's completely in keeping with fair play. And that's the official line. And as I say, the intention of being on YouTube versus just Zoom is so we've got a YouTube presence.
Yeah, and also, I think it's also important for you guys to give you guys the the choice. You know, if you want to be on Zoom for the US session, it's paid. If you just want to come into the free sessions, which Jeff and I are completely fine with too, then it's free. You know, you just get and we do it on YouTube. If we go to Zoom, then we have to start charging for this one as well. And we want to give people the choice. That's why we got two sessions going. You know, we've got one paid for anybody that wants for to come in for a bit more in the afternoon, and we've got this one free for everybody that just is able to listen for free and wants to just get a bit of education and have some company while you trade. So so yeah, it is a choice thing, and in truth, I quite like the fact that people can drop it. It's like a party, isn't it? You know, it's an open house party, and when it's on YouTube, just drop in. You know, you just don't know. You don't know who might be around, who might sort of like be looking for something, and a group of people that they can sit and have a trade with. So it's quite good that we do have one on YouTube.
That was the initial concept, Ash, wasn't it? It was just you and I having a little old chat online and seeing what we're doing, and okay, what are we trading today? Should we trade this, etc. Exactly what we're doing, you know. That was the whole concept.
Yeah, exactly that. So I think YouTube probably is the right place for it for right now. Even though I do understand people's frustration with the
yes, I do too.
Yeah,
I do too. Blame YouTube. What the hell? You know, why aren't they doing it in HD? Doesn't make sense.
Yeah, no, you're right, Raymond. I totally see that. Yeah, totally see it. It is that just to make it clear. That's why I try and blow my charts up a bit. Who was it who made the point? Somebody made the point to us about it. So we started to kind of blow the charts up a little bit. It's Kumar. Kumar made the point a little while ago about not being very, very clear. So trying to blow the charts up. Oh gosh, yeah. Let's just have a quick look at the pound Aussie, mate, before we go. I know you may have other stuff to do as well, but I want to just check this one. So pound Aussie, great, back in we're in the buy zone. So this is the first thing. So part one of what we need is now complete. Now, what I'm going to be looking for is the bounce. Have we bounced away with a bar that we can trust? Not so far. We bounced here, but can't really trust that bar. So is there enough here to suggest that we've got a long on the table? There's not. Now, there's two ways that we can look at this. We either wait for a bar to get us in. So we could have, something, I don't know, maybe sort of like closes, goes down and closes near the high. So we can have a bar to enter on there. Or we use this area because that's where people sold off prior to the move down, and use that area as an entry. Now, the one issue with that is the weekly pivot. So the question you'll have to ask yourself is there enough room between this point, the stop, and the weekly pivot? There probably is a 1-to-1 there, maybe slightly better. So that you could place an order already, really, because it's if it's going to come up again and go through that point, the chances are we get the weekly pivot. So for me, there may well be a trade on here, and I might even place it. I quite like it. I mean, I do still have an issue with Brexit and stuff. So let me give you the levels. We've got loads of time on it. Probably be above DR1. Let's see if we've got anything of value. In fact, before we Now I'll give you the levels that I'm going to put in right now, but it might be subject to change if this bar goes a bit lower. You're gonna have to move your stops a little bit lower. But if as long as this gets rejected, then that can be placed. 87 up. Yeah, that's pretty good. There's some room there. So the first potential way to do it, if there's not a strong bar. Now, if there's a strong bar, you can cancel this and enter another way. Oh, this is good. I didn't know I could do this. Okay, so entry is 1.9076. In fact, let's do 77.
You're doing that on Zoom?
Yeah, it's better, isn't it?
Okay, interesting.
What do you think?
Pretty.
might be able to make it a bit bigger. 1.9048 is probably around about the thing. Now with this one, I don't think there'll be any question of waiting for the area to develop. I think the take profit will have to be, and it'll be half off. The take profit will have to be solid, and the reason for that is Brexit and the negotiations. That this could turn around without too many problems, and it's much more likely to get caught in a range than start to take off. So that one will be a little bit different. Let's do that. I wonder if we can make this any bigger. No. Oops. Oh, I can't do anything with them now, though, mate. That's no good unless I do this.
Like my hair at the moment, mate. Can't do anything with
it. Is that can everybody see those levels? Okay. Entry at 1.9077. Stop loss at 1.0984. 0948. Take profit at 1.9159. Now, if it closes below this area, this is void, null and void. It's got to bounce. If it doesn't end up above this area, rubbish, absolutely useless, and I won't be interested. But if it can hold that area, then I think there's a chance.
Or you could wait for my false break.
The false break. Oh, the false break down.
If it closes below, then you could wait for the consolidation, then back above the trend line and the daily pivot, and a retest from the high side gets you interested again.
Brilliant. Okay. Well, is that likely to happen before the US, or would you reckon that's something we can cover in the US?
Yeah, it could easily happen on a 30-minute or hourly chart. Absolutely.
Okay. Do you want to quickly talk us through it?
Sure. If you can have a look at the questions that we've got.
Yep.
Then I'm
thanks. The only reason I ask for Zoom,
we really have to rack off.
Yes, we should. Yeah.
To OT here at the moment, but I'll briefly go through that one. This is exactly the same as we were looking for before. So break, close under the daily pivot, consolidate in here, come back above the trend line, and then retest the trend line and or the daily pivot. Then that gets me interested. So the second attempt would be good. Would really classify this as a false break of support. So that's what I'd be looking for. At the moment, it's looking very much like they're ignoring the news out of China at this point, which is, it does astound me. But one thing it does do, if we can hang on, I think at some stage we're going to get a trade here short on something. Aussie something is going to go short. That going to someone's question on Aussie CAD. with the retest of the trade line. This is Aussie CAD on the H1. That trade line is now invalid, and it's actually setting up as a potential false break on that trade line, but it's invalid. I can't give you any technical reason now to jump into a short, except if we get a false break of resistance. So that's entirely possible. We've got the break, a little bit of consolidation, exactly as I've just described in the opposite direction, pound Aussie, back underneath here, maybe take out the weekly pivot, come back and retest the confluence area, then we go. But the pound Aussie is definitely still in play for me. We can absolutely look for a false break here. If we got a retest here of the trend line and we closed on the trend line, or maybe even a little bit above it, this is now a short proposition. So I could actually see myself getting back into a short here, which would be very interesting. And I know there was one more question on pounds, and we did deal with this earlier, but I'll repeat it. Yes, I didn't close the pound trade from yesterday. You can see it's gone on the daily chart. What I did do was I recognized that my analysis was incorrect and we were still in profit at that point in time. What I did was I moved my stop loss to entry, just in case we got lucky. At this point in time, we've been taken out of that trade because we came back on entry and it took me out. I'm more than satisfied with that, because if I've got something wrong and I get a chance to correct it without it costing me money, happy days. If this goes down here, will I be sorry? No, because I think I've done the right thing. If it goes up here, then I can look to trade it down to there. But I just don't like the bad analysis that I put on that yesterday. So that's why I got out. I'm sure there are more questions that are going to remain unanswered. I'm sorry.
Alan, sorry, mate. The stop loss there is 1.9. 1.9048. Is that right? No, 1.9. It's going to have to be lower than that now, because that thing there, it's going to have to be 1.8. 1.8995. 1.8995 stop loss. $1.8995. It's pretty good, and it is on the H1. Raymond, yeah, H1.
Okay, I'll briefly answer your question, Shukri, on the 4-hour dollar CAD. This is the 4-hour dollar CAD, and we are absolutely in the middle of nowhere, as far as I'm concerned, because we've neither gone since we put in this bottom here on the bottom of the rectangle. We haven't gone to the top. We've tried again to go through that level, haven't done it. We haven't gone to the bottom, and we're now hovering on the monthly pivot. So I'm directionless, I'm afraid, at this point. Haven't got a bias, haven't got a direction that's clear to me. So I'm a nothing man. Your question is this significant that's now in between the pivots? Which pivots? The monthly pivot and the weekly pivot. Where is the weekly pivot? So light I can't even see it. Maybe I haven't even got it on my chart. I haven't. Okay, let's fix that. View navigator, weekly pivot here somewhere. There we go. We don't want it orange. We want it probably, we'll just go yellow at this point because it'll stand out. Don't want that. Don't want that. Don't want that. The answer, I know the answer before I even look at it. Yes, it is very significant, because what really is, it's done. It's given itself a high and it's given itself a low cap. So you can see even now that the pivots are very, very close together. And when that's the case, and I say this all the time, Price ain't too fond of going too far away from there. So and this goes to what I just said, I've got no direction at all, and the pivots are not giving me a direction either. If anything, they're pointing to the downside because they're in sequence. Daily is underneath the weekly, which is underneath the monthly. But they're so close together, I don't expect price is going to go too far away from them. Again, goes back to Ash's initial point, which was Jerome Powell talks tomorrow. The market's probably waiting on that to happen.
I'd say that's a certainty. Just the way that price action's developing here, which is that it's not developing. It's waiting for something. And yeah, it does seem to be Jerome Powell.
Yep. Are you done with all the answers, mate, for your questions?
I'm done with it. Yeah, there was a couple of things in there. So pound is on the story stop was too big. Dealt with that. I see latest can share the screen. Yeah, I can do that in the US show if that's what you mean there. Raymond, when you move your stop to entry, there's no spread. No, you're back to the same price. I would always move my stop just 1 pip above my entry, just because then I'll make at least a pip. Yeah, you may as well make something for your work, right? So yeah, I always move my stop just 1 pip above entry or 1 pip below, depending where I entered. But there's no spread on that. That's your entry price.
Right, last answer goes to you, Crystal. Pound Aussie, how many times crossed the line on M15? I don't trade on M15, but I'll give you my appraisal, and I'm not sure what that means. How many times crossed the line?
Oh, how many times would it? Because you said earlier on you'd want it to cross under. So Crystal's asking is, how many times would it need to cross the line? Is the 15-minute chart okay? Would that be relevant for you?
No, because I don't trade on the 15-minute chart. But that said, the setup's going to be exactly the same. And when you say how many times cross the line, I read into that before it's invalidated. And my explanation is going to be this. We've broken the trend line. And that's fine because we can still get a setup off it, right? It can be a break and a retest and we can trade it short, or it can be a false break. We can come back above and we can trade it long. So until one of those two things plays out, the line is still valid. So if we break it a second time, so we've broken it once, if we break it a second time, the only way we're going to do that is go back above it. So you need to close above it. At that point in time, the only thing that is then viable is a long with a retest. Everything else is off the table. And as soon as that retest occurs, which has to happen within the next bar, basically, if it doesn't, the line is invalidated. So 2 breaks of the trade line is one too many. Okay. Allow it to break twice because you may get a setup off the next bar, but once you don't, it's all over Red Rover. Cool.
Have you completely finished there, mate?
Mate, I have. Absolutely.
Okay. If you just throw me back the screen, just really quickly, because Alan just wants to have a quick one last look at the H1 on the pound Aussie. So we'll do that, and then we'll shut up shop.
Okay. Well, you put in your overtime claim, and I'll reject it. Right?
There we go. Great stuff.
Look, guys, whilst ever we can, we're going to sit here and answer your questions because
yeah, we can. Yeah. If there was something pending, then I would have to leave, but I don't right now. So this is the hourly chart. Now, the first thing I said is that you could wait for this bar, and it'd have to be a pretty strong bar. It's almost better that it spends time. Let me blow this up for you. It's almost better that it spends most of the hour down here. Because if it spends most of the hour down here, and then right towards the end of the hour, it starts to shoot up again and close at the high. So let's say this bar ends up in the next hour. So by what would be 10 o'clock UK time, it ends up getting back above this level and closing up there. That would be fantastic, especially if it happened in the last, say, 15 minutes or even the last 5 minutes. That would show that there's a lot of confidence in this particular bar. And then we can, you know, this stop's now too high, right? Because it's touched that stop now. So we're always going to have to be putting our stops, you know, at least 5 pips below this bar. So it's got to go 5 pips below this bar. This bar is going to have to look like this. If it wasn't a really strong bar, if it ends up sort of inside the trend line, but it's sort of like, you know, this, like that, not interested. You know, I want a really good looking bar here for me to enter here. Now, if I don't get the good looking bar, this entry still is valid. You know, it wouldn't be ideal because I'm not going to be with you guys, but it's going to be, you know, in the US session, we will cover it and have a look at it because there would be a better way to enter this, which I'll cover later. But if you want to get an order in, then this place would be valid. 1.9076 would still be valid if this bar doesn't result in a decent bar. But have a look at this at the top of the hour, because as I say, the longer it spends down here, the better, because that's just, you know, because what it will show there is a genuine hold if it can end up near its high. So that's what I'm looking at. That bar, you know, that bar is really pivotal to this trade now. Okay, mate, I think we are done.
We are done. We can't discount the fact, of course, that a lot of fake news comes out of China. And if this is actually a ruse, as the market seems to be thinking it is, then actually, just one more thing, indulge me one more. Go back to the 7th of May, the high on the 7th of May,
yeah,
which is the second swing on your left-hand side there.
7th of May, this one?
Oh, no,
or this
go
one?
up, one more. Yep, there. Draw a trend line through the 11th of May, that high there, yep. And that is a clear false break setup on a resistance trend line.
Yeah.
So they may have thrown me a complete sideswipe, and my bias is long for the wrong reason. Well, not for the wrong reasons, but there's every chance that that this is going to go the way it ought to have gone without this interruption. But anyway, that's just something to think about. And, you know, the candles will tell the story.
And you know what? I'd encourage everybody to draw that line now on your chart, because with that, it won't matter what this bar looks like. It's got to get above that. Which means that this area up here would probably be the safest area. So, you know, somewhere around about the DR1 area, you're still looking really for an entry long on this one. Otherwise, I don't think that one's got any validity at this stage.
Yeah, look, interesting. That's really interesting now. Mate, if you've got to go, I'll answer this last question. This is the last one, guys. From Sino Scott. Please have a look at sorry, I've got bloody notifications coming over my thing.
Kiwi Swiss.
Kiwi Swiss, right. Have you got the Kiwi Swiss chart there?
Yeah. On the 4 hour, right?
Is that what he said? H4 or H1? Did I not have a look at this?
Oh god, this is quite interesting, this one. Yeah, you look at this on the H1 here. There's a trend line going right up there, which is where we are, and it looks like a lot of breaks and breaks and breaks and breaks. I see the thinking behind it. Yeah, this one looks pretty good. Do you know what? What would be better with this one? And I'll tell you the problem with this one. Is not on these short-term timeframes, but on the longer-term timeframes. If you look at this on a daily, then you've got this engulfing bar here. Now, that doesn't mean the trade isn't still valid. It just means that there may well be some downward pressure. So tomorrow, I think this would be more interesting. I think you'd want to see at least a hold for the day. And if it held for the day, then you can start considering it. But I don't think it would be wise to get into this one today. I think there's quite a lot of noise. Is it like to pop up from here? Well, if it's going to pop up from here, it's got to get above the daily pivot, and I wonder whether you might be then in a slight battle with the highs you know, of where you're going to be taking profit. So it's got to get above, because you can see the resistance is here, and there's a lot of false breaks, back up again, false breaks, back up again. So it's a bit of a mess. In my opinion, this is really got to clear out first. So a close above this level here, and what would probably be the daily pivot as well. That would get you out of this box at least. And then you can trade it. But I don't think, you know, in my opinion, I don't think there's a trade here. But you want it up there, and then see if you can come back, test the daily pivot, and then go. It's pretty much going to be the same price, but at least you get out of all this noise, because this could break down. You know, that engulfing bar from yesterday is a bit of a problem. So if this is still holding by the end of tomorrow, the end of today, then I think you know, that the upside would be more valid, and you might be able to take something slightly weaker. But I still think you probably want to get out of this box, and get above the trend line and the daily pivot, and then come back and test it. Any thoughts on that, mate?
Yeah, I've got a channel which you can probably see on H4 a bit clearer, and it is a rising channel, and it's pretty much in that same zone, same thing. But if you look at it on a 4-hour chart, it's a little bit lower, and we're in no man's land, really, at the end of the day. That looks completely different to mine. Isn't that interesting?
Oh, okay.
Hang on a sec. Go back to the 18th of March, where there was a V-shaped recovery. You want to have a look at the right-hand side of that V-shape.
Yeah, this one, the right-hand side. Yeah, this here, yeah. Over here?
Yep. So if you have a look at that channel, that's got you bang smack in the middle of it. And the pivots are very close together. We're oscillating between the daily and the weekly, as you said, Ash, and I don't see a direction here right now. I see the potential.
I mean, there's a horizontal level. Yeah.
I think your bias is right, but do I see a trade there? No, I don't.
The horizontal level is interesting there as well. It's holding quite nicely above that horizontal level, but it is a bit noisy. It is a bit noisy, and I think you're going to need some clarity on this one before you trade it. I think you know, as I say, getting above the daily pivot might start to provide some clarity, and at least you've got somewhere to aim for that would give you a 1-to-1, you know, stops at the lows if you get the daily pivot, and then you can aim for this area and see if it's going to go higher from there. If it doesn't, I think Jeff's right. I think this has got a, you know, maybe even a chance of breaking down, but it'll have to take out the weekly pivot, you know, and you've almost got a binary trade. Breaks down the weekly pivot and bounces. You probably trade. You're probably looking for it down there, but you're looking for the H4 long, which you know, I agree. I think that's probably the right direction. But I still think maybe waiting a day would be better. That may end up putting the daily pivot underneath price as well, which would get it out the way. And then you can look at something slightly different, maybe a 15 or an hourly, to see if there's any kind of trend line starting to form. But it's a bit messy right now, for sure.
Yep, agreed. No man's land.
Yeah. Okay. Well, we will be back tomorrow. It is already hump day tomorrow, so back same trade time, same trade channel. Enjoy the rest of your afternoon, guys. Enjoy that. You're very welcome, Sino. You very welcome, and you enjoy the rest of your day, and we will see some of you in the US session later on and see what has developed. FTSE 100 still floating around the high, so we're still kind of like holding on to that particular position, see what happens. If any of you are still in that, and we'll be in the show later on, we can cover some more to do with that as well. Otherwise, we will see you later. God, we've almost done 2 hours today, mate.
Yep. It's amazing how time gets. We've covered some territory too, I can tell you.
Yes, we have. Yes, we have. But it's great to give you guys some value as well, and help out where we can. I'm just going to have a final look at the Aussie pound. Yeah, that's looking pretty bad right now. It's got to jump up. So 10 minutes for this to jump up, and maybe things change. But I don't hear anything on the offing, which is changing the mood on the
making me look like a complete goose at the moment by exiting.
Well, you didn't get in, to be fair.
No, I've been in pound Aussie for.
Oh, weeks. I see what you mean, because you were short. Yeah.
I got out. Anyway,
Oh, I don't know,
look,
mate. I don't
the
know.
day's not over yet. It's only young. Don't worry.
It's only young, and then there is a double bottom down there on the daily as well. So I think you've probably done the right thing. And actually, the weekly, there's a little trend line on the weekly as well. It looks like it's got to. So I think you've done the right thing personally, mate. I think this is a definite significant area for bounce. You look at that weekly chart, little trend line along there. Look at the daily chart, already putting in a double bottom here. So it might have a little bit further to go, but I think 1.8893 might be done for the Aussie pound. Then maybe we can genuinely look for some upside. I don't know. We'll see. We'll see. We'll check it out later.
See. And I'll still be bearish the Aussie until this time tomorrow. If it's changed, then it's changed.
You're welcome, Raymond.
As I always say.
Yeah. What do you always say?
SH1T happens, and I know when I'm wrong, I feel shitty. When I'm right, I feel fine. So it really is that simple for me. If I feel comfortable, there, mate. Is that right?
I think there should be
the SH1T song.
Yeah. If I'm wrong, if I'm right, I feel fine. It's like a Beatle. I can imagine the Beatles doing something about that.
Right, I will work on that.
Yeah.
There you go. I've given you one line of the lyrics. Easy.
Yep, I'll get my piano up and we'll have a little go on it later on. Any guitarists in the room, maybe give us a helping hand. Okay, mate. Well, we're done for right now. We'll see you all tomorrow, same trade time, same trade channel at 5 to 8. See you then, guys.
That's the date. Don't be late. Uru.